Hey guys, how are you today? It's June 26th. What's going on? Let's go do some trade reviews. So I traded the NASDAQ. I had a lot of different trades. Many failed, and I learned a lot of things today actually, and I'm very quite happy I recorded the session onto my computer, recording my screen, because it's definitely a session I want to go back and watch. You can see I had 28 trades, very bad win rate. In fact, very negative day, 32% win rate, because I was trading very aggressively in some moments, trying to trade counter the trend, in fact, and just trading very low quality setups and not the setups that I normally trade. So actually the setup that I trade, the variables I put together in the setup, the trades I took today, the majority of them were not even that. And now why was I doing that? I'm not too sure. So I guess I was experimenting. I was trying to experiment with another setup, which in fact was failing quite often. I guess I became slightly delusional to what the market was actually doing. So, a large part of trading and scalping is pattern recognition. And there were many patterns that were occurring today. The main one was the fact that the rallies kept getting sold, especially during the morning session, okay? So I started trading as soon as the market opened. Around here was my first trade where I got long and then I stopped out. So I was expecting us, after a bounce like this, I was expecting us to see a pop to a higher high, and that would have been where I was taking profit, okay? And then we didn't see that, we just got lower prices. Now, during this, I found myself trying to get long way too many times. And I need to go back and truly fine tune why I was doing that. And that's why I'm very happy I recorded the session. So you can see here now, look at the 4 EMA. The 4 EMA for me provides a good guide for the momentum on the shorter term time frames. So you can see how after we got a bit of relief, now again, the replay function doesn't work with futures for some reason, so it doesn't matter. We got a bit of relief here, and that's kind of where I started to get interested in a long, and I got stopped out very quickly. And you can see how after that we tried again. So that right there would have been a setup that I would trade counter the trend. You can see how we try for a second attempt lower and fail, but no buyers jumped on that. In fact, the sellers stayed in control. If you look at that on, say, the 2-minute chart, on the 2-minute chart, it was just an inside bar. That kind of wasn't great. So that's why I need to I can't give too much precedence to that 30-second chart. I need to understand how it's reacting on that 2-minute chart as well. And, I'm going to switch to using tick charts pretty soon as the data comes in July. But my trading view charts still provide a very great guide for understanding the price action, combined with the order flow, of course. So moral of the story here, I was trying to get long during this. Now, I find this one was a higher quality setup where you can see how we traded lower very quickly and then traded back up and closed above the 4 EMA. Right here would have been a slightly better setup because you can see we're trying to regain these prices. Shorts who jumped on this one aggressively are likely trapped. And you can see look at the volume imbalance here, and then we're slowly trading above that volume imbalance, which means the shorts are getting trapped out, okay? So that's the kind of setup you want to be part of. You don't want to be a part of this because look, after a drastic move like that, who's under pressure? Well, longs are under pressure from here and here and here if they didn't stop out their trades. So I don't think there was enough of an imbalance here yet, and that's kind of what I got wrong. The sellers defended those points here. Now look at how the price reacted. So it failed to move higher multiple times, and then we try again. Over here we're in sort of a trading range. Now watch how we react around the trading range. We had multiple times these sort of bullish engulfing candles, which really mean nothing at the end of the day. Candlestick formations at the end of the day do not mean very much. Okay, what matters is the volume, where it's taking place, how these prices are moving and where they're moving, and the order flow basically. Although candlestick formations can provide a good indication in some cases, but not in all cases. Because you can see, look at this right here, bullish engulfing, we break the highs, and then no follow through. We try another time, couldn't break it, no follow through, pretty much a double top, and then we traded lower. So you can see here 3 times, once, twice, and 3 times, tried to get above this 23 area and failed all 3 times. So that right there was a signal. And again, noting this stuff for me is going to be the most important thing for my trading, which is just taking notes of how many times a price level fails, because that's going to give you an understanding of who's trapped and where, right? So when this was trading up here, I had to be noting it. Okay, we failed it. It's 2 times we failed it. So that means there's stops accumulating up here. So you can take a long trade and keep a target up here. But if you don't get your target hit, and if this fails again, that's going to be a 3rd attempt and a failure, meaning that longs are likely trapped. And what happens is we break bearish and longs get trapped, of course. And now during all of this here, this is all a bunch of noise. So we had the impulsive move, and then we slowly have this sort of noise stuff going on here. 10:01, you can see we're breaking bearish right at that point. We're sort of an inside bar closing below that 4 EMA. It doesn't indicate strength, okay? And that's why I think grabbing the long trade there just makes no sense. And you know, I got that wrong, of course, and that's why I need to go back and watch the session. During the 1 minute chart, this was just a big old bear flag chopping around that 4 EMA, just a big old bear flag. And then, you know, buyers are not arriving to push this thing up, and then sooner or later we started trading lower. I notice how the lower we trade, the more aggressive the moves get, and that tends to always happen. Same way when we go up. We go up slowly, and then the higher we get, the more aggressive the moves get, of course. So that is it. So I found myself on the wrong side of a lot of this, in fact. I wasn't really aware of a lot of this type of trading. I had to be more aware of watching the tape. Names like Apple and Microsoft, they were selling off very aggressively this morning. And now getting down to our key support. Now, this is where the long trade starts to make more sense, because we're actually coming towards our key support, which was the low of yesterday and the overnight lows of yesterday. And you can see how we came close to it by 3 points and then traded higher immediately. So if you wanted to take a long trade, you had to wait for the failure right around here. So you can see how we had the low bottom there, and then we tried initially for another leg down, and then that one failed. That right there was a good opportunity for the long trade, okay? And you can see how we attempted a second leg, and the second leg up failed initially, and then we moved back down and broke to a lower low. Again, a great long trap. Not as apparent as the ones earlier, but again, one attempt to break that resistance and a failure. The sellers answered pretty aggressively because, again, this attracts long traders, right? So the long traders are going to look to buy the dip, and if they see the thing is going up quickly, they're going to look to jump on this. But when it fails at the resistance, then whoever's entering here or here, well, they don't have much breathing room before their stops get hit, and that's where they are getting stopped out. So again, it's looking for the traps, being more patient with the traps being set. And that's kind of what I didn't get right today. I wasn't patient enough. I had to be sitting there, just watching it, sitting here like this, and just watching the thing move. And just saying, all right, buyers are coming in there, sellers are coming in there. Look at the block orders, when they're coming in and when they're not coming in. Because if we're not seeing block orders, that means the price is moving on retail, which means that retail is likely going to get stopped out. I've seen this before. All right, this right here was great. Now, during all of this right here, during all this move, you can see we're trading below the overnight lows of yesterday, that key support area that I had marked. We traded below it, then we popped, failed around the 9900s, saw a big leg down, pretty much a volume climax, straight into a bull. And then we slowly chopped in this general area. And keep in mind, during a lot of this move, a lot of these down moves, there were not a lot of sell block orders, okay? There was not a lot of block orders coming in. And that's what made me realize that a lot of this move was likely going to be driven on retail. Retail trying to get a hold of the party here. But really, we're near the support zone. This is not generally an area you want to be shorting into. So that's something I noticed, is that there was not a lot of block orders, not a lot of big size orders coming in here. But there were some buys coming in anyhow. And then we slowly traded higher as retail was getting trapped. Now look at how the price was respecting this 4 EMA here. Once we broke above the 98, 93s, this took a bit of time to follow through, but when it did, look at how it reacted around the 9900s. We just kind of went for it and went for it and went for it and went for it. There was no sellers ready to answer there. Just a bunch of short covering, retail getting stopped out of their shorts because they were getting short over here. And then we managed to trade all the way up to this pivot from earlier, the 36s, and then we trade higher and chop around into lunchtime, then trade higher from there. So lots of great price action to learn from, guys. So I'm just gonna state my points for today. First of all, too aggressive and not in the flow of the market. I was not waiting there, being patient enough, waiting for those quality failures, those quality setups to set up, okay? Next point is I had to focus more on the trend, which in fact was down, and more specifically, the recurring patterns. They became very clear afterwards, and I found myself trying to buy the dip, and every time I bought it, it would always come down and tick me out of the trade. And that was a recurring pattern. Every time it would tick up to somewhere near the moving average, there would always be a seller waiting to answer it and smash it back down. And that right there was a recurring pattern that I found myself on the wrong side of. Again, if you're looking to trade this kind of style, you want to be sitting there waiting to identify a pattern that's recurring. And then you can use that to your advantage. And again, when the market is selling, the patterns change quite a bit versus when the market is in a trading range, for example. All right. So again, I had to focus a lot more on the recurring patterns. The next point is that I had to focus more on when these block orders were coming in. So if you want to see generally what I have going on here, and I'll tell you what the block sizes I'm using and everything. So for the NASDAQ futures, I have anything above 15 lots as a block order and anything above 75 as a large block order. And the way I measured that is just basically with a dollar volume indicator. So for 10,000 SPY shares, the dollar volume is around 3.1 million. So I just did the equivalent of 3.1 million. How many NASDAQ contracts is that? And it's about 15 contracts. So anything above 15 is considered a block order, and anything above 75, which would be 5 times that block order, is considered a large block order. Okay, and for the Qs, it's 12,700 shares. That's the block size I use because it equates to that dollar volume of 3.1 million, and then anything 10 times the size of that is considered a large block order. Anyways, we were getting a lot of that. Look at that right there. You see that imbalance? This was a block order of 270,000 shares that I saw come in earlier. Probably a large short covering. The point of the matter is I need to focus a lot more on when the block orders are coming in and when they're not coming in, because when they're not coming in, it means that retail is likely moving this price, and we do know that retail is likely going to get stopped out. The next point here, now this is relating more specifically to the strategy I trade. So I've made the point, I've made the decision, when I'm scalping the markets, I'm not having a hard target. I'm not looking for a hard target of 10 points, 15 points. What I'm doing, in fact, is I'm just watching the order flow and to see if that is confirming my trade as being correct, okay? If the market's giving me 10, 15 points of profit, I'm likely gonna move my stop to break even immediately at that point. And I'll probably even lock in the profit depending on the trade, of course. The point of the matter is I'm not using hard targets anymore. I am using a hard stop, but I'm not intending for that stop to be hit. That's the kind of trading I'm into. So I want to scalp the markets in a way where as soon as I get in, the trade is moving in my favor. I don't want to have my stop get hit, but my stop is always going to be there. So I'm always going to have somewhat of a 10-point stop in the trade in the case of I get in a trade and my internet goes down or something, you know? So for example, if I press the button, I've got the initial trade and then the stop order 10 points higher or lower. And that's always going to be there no matter what. Because like I said, I don't intend for the stop to get hit because in the style of trading I'm doing, I want the momentum to make my trade right almost immediately. And that's kind of what I'm after. So that stop is there as an emergency, right? So if I'm trading, the internet goes off, stop needs to be in the market, okay? Because and that stop is programmed to be the dollar volume, the max dollar volume I'm willing to lose on the trade. If I'm trading one lots on the micros, it's about $20 per contract. So that's the general story, guys. Those are all my points. So I just shared with you a whole bunch of stuff here. This is Friday, June 26th. I hope you enjoyed today's video. I wish you guys a great weekend. I'll talk to you tomorrow. Take care. Bye.